So is this stock market rally for real? We have CNBC contributor Jerry Bowyer. We have Gary Schilling of A. Gary Schilling and Company. Welcome back, gentlemen.
Thanks.
A. Gary Schilling and Company, you first.
Yes, sir.
You don't think this rally is worth anything, has any merit, and you would sell it. Is that right? I don't want to put words in your mouth. Someday you may change your position.
I know you never do that, Larry.
But what are you thinking?
No, I think so, because if you look at the post-war recessions, there have been 11 of them, including this one, and in 8 of those, there has been at least one up quarter of real GDP. In other words, the economy is down, but then it rallies and then goes back down.
So you're saying it's a false dawn?
I think it probably is. That's the norm. 8 of 11 have been that way, and you've had accompanying bear market rallies. So my feeling is that, yeah, this has been very powerful.
Would you sell it right now? Right now, tomorrow morning? Are you a seller?
I'm thinking about it.
Whoa, you're pausing.
It's looked like...
This is the most bullish pause I've heard from you.
I don't like to stand in the way of freight trains, but it looks like it's running out of steam. And the problem is that the consumer is still very, very weak. The consumer is... as a matter of fact, if you look at the first quarter, because of tax rebates and so on...
I got to get Jerry. I got to get Jerry.
Oh, wait a minute. Let me just get it.
Tax rebate.
Okay.
So the consumer's going to
because of that, because after-tax income went up $134 billion at annual rates, consumers only spent $28 billion of that. They saved 87%. They're really on a saving kick, and that's what's dragging the economy down, and will keep it down.
All right.
So they're saving. They're buying stocks. That sounds good to me. Right? If they're not spending, they're saving. They're investing.
Well, sure, but that means if they're not spending, it means the economy is weak, and it means that the fiscal stimulus is not working.
I think
they're going to have to come back with a lot more, frankly.
Did you see the chain store sales numbers this morning? I mean, they're up. They retraced their losses, chain store sales. I mean, we saw GDP, good growth in the first quarter GDP on consumer spending.
Yeah.
Since then, the intermediate numbers have shown even more improvement.
Well, the retail sales, they rebounded in January and February after the disaster in the fourth quarter, but then they were back down in March. And, we don't have April, and the chain store sales are...
Yeah, we do have April, because they do it every week. They do chain stores every week.
Not retail sales, Jerry. We don't have retail sales
Right, they have chain store sales, which is a pretty good proxy, and that's up.
They vary considerably oftentimes from
But, gentlemen,
retail
I'm just going to ask you, it's not the defensive stocks leading the way. It's the cyclical-oriented, economic growth-oriented type stocks.
Because it's a new cycle. This is the new
Right.
cycle.
I mean, when you go down the S&P sectors, the winners are commodities, energy, particularly banks and financials, where the stock market is giving its own stress test reading of great improvement in banks. You also got industrials. I think I said raw materials, Jerry. I mean, to some extent, you either believe in the stock market as a signal or you don't. I think that's the issue here.
Yeah, and I do. It's the beginning of a cycle. It's the beginning of the recovery cycle. I don't know how big a recovery it's going to be. Look, I'm not Robert De Niro. I'm not a raging bull here. I don't, this is not the next boom. But the cycle has run its course, and now this is the up. This is the up cycle.
Jerry, you and I spent a lot of time arguing. You argued there was no such thing as a recession, and I said we were in one, and we were in one.
You're right.
Now you're
right.
Yeah, now you're saying
I do not concede that
you
point.
never foresaw, you never forecast is over. Now, what makes you so sure you're right this time?
Well, I'm sure I was right last time. I don't think we were in a recession last summer.
Never was
I don't care what the National Bureau of Economic Research says. I go by 2 quarters of shrinkage, and we didn't have it. And yeah, we got a recession. I acknowledged the recession at the end of the year when we actually entered it. Look, maybe I was a couple of months late in forecasting a recession, but you were like 3 years early. So
no, I was
I'm not sure whose record we're going to go for.
Let me be constructive here. I want to ask your opinion about Bernanke. One of the things he said today, that recovery is going to happen before the end of the year, one of the things he pointed to was a clear bottom in housing. And we've had an awful lot. Now, housing is your specialty de maison. That's where you started this negative recession trend, and you were quite right. But if housing is bottoming, what's going to give you a continuing recession here?
Well,
and by the way, home builders are off the charts. They're up 80% in this stock market. Like, that's not a small amount, Gary.
The stock, yeah.
Yeah.
Well, it's
got to mean something.
Well, what's interesting is that in housing cycles in the past, housing sales of existing housing particularly have actually turned up while housing prices are still declining. That's because of distressed sales. That's exactly what we're seeing.
Well, it's a market. Affordability, look, Bernanke said today, affordability was very high and mortgage rates very low. But that's really important.
And that is very typical, but prices tend to keep going down, and we do have these 2 million extra houses in inventories. That depresses prices.
Jerry, last word. You buying or selling tomorrow morning?
Oh, yeah, I'm still a bull. And you know that video, that Oz video with the house falling? You got to run that in reverse next time.
Because it's going to be rising.
Oh, it's rising.
It's going to be rising.
Home sales are rising.
Buy the stock market until the tax hikes kick in. That's the Jerry Bowyer point. Anyway, thank you, gentlemen. Have you back as soon as we can. Jerry Bowyer, Gary Schilling coming up.